Hello, welcome to the second session of the um, three drive pattern series. In the first session, we spoke about the channel. In this particular one, we are going to talk about the diagonal triangle. Okay, so with the channel, I think we look at the way to identify the channel. Okay, where we were talking about the um, double ABCD pattern. So you have ABCD equal pattern two times. Okay, right? So we have a first drive, a second drive, a third drive, and we said the market will do that when it is approaching a point of interest. Okay, so that was that one. And then we said it was confined within a channel. Okay, so the channel doesn't make it a three drive pattern, but the sizes of the waves, okay, makes it what a three drive pattern. So another thing is that the channel, the three drive pattern is not just a channel, it can be a diagonal triangle. So today we are going to look at the diagonal triangle. Okay. All right. So the diagonal triangle. So we are saying that the diagonal triangle can be classified into two. So we have the leading diagonal and the ending diagonal. Now, leading diagonal and ending diagonal, or diagonal itself, is an Elliott wave theory. Okay, Elliott wave theory. And smart money, we use three drive pattern, but we don't classify them as channel or how do you call it, diagonal, because we don't use measurement. But Elliott wave give precise kind of measurement that you can use. So if you understand um, the way they measure their waves, that is with the leading diagonal, end diagonal, or even the three drive pattern in terms of the channel where you have double ABCD, you're able to you'll be able to anticipate change of trends. Okay, so leading diagonal and ending diagonal, and I'm not going to explain it as Elliott wave used to explain. Okay, so Elliott wave traders will explain the composition of these particular waves in the diagonal triangle. Okay, for instance, they can say that the ending diagonal will give you A, B, C, D, A, B, C, D. That is, we are giving three waves in each of them. I don't know if I'm right, but they have a way of explaining it. Like, okay, so we have one, two, right? This is going to be one, two, one, two, one, two, one, two. So they'll count it this way, right? And then maybe the ending diagonal, leading diagonal will be one, two, three, something like this. So they have a way of counting the waves within it. So that will give you a difference between the leading diagonal and the ending diagonal. But we are not too interested in those technicalities. What we want to know is how they look like, where they appear, and how we make use of them. Okay, so at the end of this lesson, you'll be able to identify what a diagonal triangle is. You may not be able to identify the differences between the leading diagonal and the ending diagonal, but if you're interested in that, you can look for more example into Elliott wave. That is where the very good description of what the leading diagonal is and what the ending diagonal is. Okay, so now the leading diagonal is a continuation pattern. This is from my view, from my own perspective. I think the leading diagonal is a continuation pattern because it gives more rewards in terms of continuation, and the ending diagonal is a reversal pattern because it gives more reward in terms of what the in terms of reversal. So what I'm trying to say is that we know that leading diagonal will start a wave count, so they are usually in wave 1 or wave A, okay, in a correction. So for instance, if you have one, wave 2, wave 3, wave 4, and wave 5, okay, leading diagonal will usually be in one of this whole wave, or in a smaller count with one, two, three, four, five. This diagonal will be here, and even in the five, okay, one, two, three, four, five. The diagonal will be here. Okay, so in the correction A, B, C, the diagonal will be at the start. Okay, so what you are saying is that leading diagonal is always at the start of the wave count, whether it is a smaller degree wave count or a larger degree wave count. Don't bother yourself with all this. Okay, so that is the reason why it is a continuation pattern. For instance, so if I have a leading diagonal occurring here, if I have a leading diagonal occurring here, okay, and I'm going to see a triangle, have a triangle like this. The wave is going to be inside. If I sell, I'm not going to make more money, but rather if I buy, I can pick this. Okay, so now going to the ending diagonal. Okay, the ending diagonal gives more rewards in terms of what reversal because they are always at the end of the wave. So for instance, again, if I take wave 1, wave 2, wave 3, wave 4, wave 5, this wave 5 is going to have an ending diagonal, something like this. Okay, so I'm going to have ending diagonal in it. Okay, so with this, if I sell here, I'm going to have more reward because price is going to trade below this. Okay, now if it is in wave 5, then it can be in this wave. Let's say we have another three wave count in this third wave: one, two, three, 4, and 5. Okay, any diagonal is going to be here. Okay, so we trade this to continue the 5. If you have a 1, 2, 3, 4, and 5, this is where the ending diagonal will be. Now, if you have an A, B, C, D, it's going to be at the end of the on the C wave. That is A, B, C. Ending diagonal is going to be here. All right, so that is what all this means. But you're not going to use it. You just need to understand how I see it. Okay, from the Elliott wave perspective. Sorry. Okay. So the diagonal are usually confined uh, in a wedge. So for instance, so if you have the diagonal triangle, okay, because it's confined, the two lines, look, the two lines are moving towards the same direction, but they are converging. Okay, they are coming together. So at the beginning, we have a bigger space, okay, and a smaller space at the end. Okay, so this is what makes a wedge, right? So in the next slide, we're going to learn about the characteristic. Okay, we are going to look at the characteristic. So this is a bullish diagonal, and this is what? A bearish diagonal. Okay, so okay. So now we are looking at the characteristic of the diagonal triangle. So we are doing a trade drive. I don't think of it as a triangle, but as a trade drive pattern. So price makes a move in a certain direction called drive one. So you have a move to the upside, which we are calling drive one, also known as wave one. Then we get a pullback. Okay, so realize that in the channel, I measured the pullback. I gave a specific measurement of 50 to 70 to 78, but here I didn't give any measurement. Okay, the pullback. Now, price moves a distance that is shorter than the first drive. Okay, so this is the drive one. Price will move a distance which is not as long as this. Okay, remember on the channel we said it is going to move equal distance. This is not going to move equal distance. This is going to be shorter. Okay, and as time goes on, as we progress in the presentation, you understand. Okay, so that second drive is shorter than the first drive. Then price makes a pullback again, which is shorter than the first pullback. Okay, so not definitely shorter, it can be shorter, usually can be a bit equal. Okay, but so we use the word shorter, it's not going to be longer than this, and it's not, that is not an important wave, the length is not that important. Okay, but we say this is the most important pullback, and usually between 61.8 and 78.6 retracement. Okay, so this is the pullback. This should be about 61% or 50. It should be at least 61%. Okay, usually I like the 61% to 78% retracement of this particular move. Okay, so it's a 78 61% retracement. Okay, it is at this stage that we can identify the diagonal triangle. So it's at this stage that you know that it's a diagonal. You don't know the diagonal, you don't know it's a diagonal at this point. You don't know when this one is formed, and you don't know when this one is formed. You only know it's a diagonal triangle when we form the fourth wave and price fails to go beyond this one. Okay, so what do we do? Okay. So at this stage, place a trend line through the end of drive 1 and 3. So we have drive 1 and 3. You place a trend line here, and then a trend line through what? Wave 2 and 4, like this. And you are going to get a shape. Okay. So here we have the shape. So at this point, we have identified the drive, that we have identified the third drive pattern, or the diagonal triangle. So we have drive 1, drive 2, and the fourth one fails to go beyond this. Okay, you can even buy here if you have a signal or a confirmation, maybe a break of structure on a smaller time frame, or price hit and a point of interest here, and we have a break, we can even buy this. Okay, then price makes a final move, which is drive 3, which cannot be longer than the drive 2. Okay, so price will move a distance that can never be longer than this third wave. Okay, can never be longer than this. It can never be longer than drive 2. So drive 1, drive 3, sorry, can never be longer than drive 2. Okay, so look at it. Okay, so it makes a third drive which cannot be longer than drive 3. So what do we do? Okay, then we will have a reversal. So the reversal will happen here. Okay, so this is just to know how it is formed, right? So we have a first wave, a second wave, which is a pullback, right? It's these are also impulse waves in Elliott wave. Okay, but just in this impulse, wave 4 can enter the price territory of wave 1. Okay, which is not so in a normal impulse wave, which is not a diagonal. Okay, so now we have a drive 1, drive 2, and drive 3. And the drive 3 is never longer than drive 2. And then drive 2 is also no longer than drive 1. And then the rule says that drive 3 can never be the shortest among 1 and 2 and 3. That is, okay, so let's go on. So now, general rules of what? The diagonal triangle. Here, I'm not looking at the whole rules. There are a lot of rules, but we are going to use only two of them to our advantage. So one, wave 1 is usually the longest. Okay, so wave 1 is the longest, and then 2, wave 3 cannot be shorter than wave 1. 3, they cannot be shorter. Okay, wave 3 cannot be the shortest among wave 1, 2, and 3. So among 1, 2, 3, among this, and this one can never be the shortest. And we are already saying that this is the longest. So how can we take advantage of this? Since wave 5 cannot be the longer than 3, since this 5, this particular one, cannot be longer than number 3, then okay, then we measure the length of wave 1. Not wave 1, sorry, it's supposed to be wave 3. We measure the length of wave 3. So then, since 5 cannot be longer than 3, okay, we measure the length of wave 3, which is this one. We measure the length of wave 3, and then we transpose it to wave 5. Then we transpose the length onto the start of wave 4 to determine the maximum length of wave 5. So now we are going to move this length onto this 4 to measure the maximum. Since it cannot go beyond 3, since this 5 cannot be longer than 3, we can use the 3 to measure or to estimate the extent to which it cannot reach. Okay, so now we're going to move this measurement onto 4. Okay, so now this is the maximum length of wave 5. Wave 5 can never go beyond this. So since the rule is saying that wave 5 can never go beyond the length of wave 3, then this is going to be a stop loss. Above this is a stop loss. If it's really a diagonal, it's not going to hit the stop loss. Okay, so we have a stop loss at this particular level because the rule says what? Wave 5 can never be shorter than wave what? 3, or drive 3 can never be shorter than drive 2. Okay, so because of this, we can use this as a stop loss. So now we can start looking for trades. I'm not saying just trade here. You and just looking for trade above wave 3. Once price trade above wave 3, we become alert and start looking for what smaller time frame confirmation to sell to the downside. Okay, so now this is an example. So we have a diagonal triangle, right? So we have one, two, three, and price was forming its wall. Okay, so you draw a line to the top and to the down and see what price did. We measured from 2 to 3, measure the length, and then we transpose it to 4 to get the maximum level. So we know that at this point, price cannot go beyond the head of this rectangle. Okay, so with that, price above this, start looking for what confirmation to sell. Once you get a confirmation, boom, we sell. Okay, this is another example. So you can see that this length has been placed here to measure this. So at this point, we know that this drive 1, drive 2, drive 3, this one cannot go beyond this point. So from here, we start looking forward, sell to the downside. Okay, this is another example. This is wave 1, wave 2, wave 3, wave 4, wave 5. And we know this is the length of wave 3. This is the length of wave 3 or drive 2. We transpose it here. We know the length, the maximum length of wave 5. You know it cannot go beyond this. So above this level, we start looking for confirmation to sell. Okay, this is Euro USD. Another example. So we have a first wave, second wave, a third wave. So what you do is that we measure this. We measure this from here to here. Then we put it around here. We are going to get this. We know we are not going to go above this. So above here, start looking for confirmation to sell. Maybe you may not get a confirmation, but we traded below this. We retest, and then this is the end diagonal. Okay, so this is Bitcoin recent chart. So we have 1, we have 2, we have 3, 4, and then 5. We know that 5 can never be longer than 3. So you can measure 3 to estimate the maximum length this one is going to go, right? So around the trend line, we start looking for sell opportunity, trend line and above what the previous high, we start looking for sell opportunity. If you miss this, you can take a retest, okay, on this candle, right? Okay, so this is recent chart. This is something I'm looking at for next week. Okay, so I'm looking at cat JPY. So here you can count the wave 1, 2, 1, 2. We have 3 here, and then we have a final wave 5 that is forming what diagonal triangle. Okay, so I measured this and this, place it here to here. I don't want to see price go here. So once price has traded above this, I start looking for trade near the trend line. Okay, start looking for trade near the trend line. If I get confirmation, I enter and boom, take profits down here. Okay, so that is it. The same chart. Cat JPY. Have first move, drive 1, drive 2. Sorry, drive 1 is here, drive 2, drive 3, which cannot be longer. So stop loss slightly above this place. So looking for sell. Okay, you can do this and then we sell. You can sell and then retest. Okay, so that is it for this one. I'm going to continue with how to trade them, how to actually apply this in the smart money concept. Thank you very much. Bye bye.